Hi everyone, Jerry Wang here. Today I want to talk about 2020 Q2 New York City real estate prices and the impacts of COVID on the entire housing market here. The reason why I want to do it is because I'm seeing a lot of different numbers being thrown around. House prices going up, house prices going down, and also the number of sales going up drastically and declining drastically. And it has really thrown a lot of people off, especially the people who have not been doing deals or have not been watching the market for a long time. And today I want to clarify these things and give everyone a chance to kind of understand what's going on and where we are going and what to expect. For those who don't know me, I am a real estate broker. I lived in New York City for about 20 years now and I have about 8 years of real estate experiences. So without further ado, let's jump straight into the numbers. For data and market reports, I personally like to use 3 to 4 different sources and try to compile them and analyze them independently and try to come up with a consensus, including my own experiences as well. Now, for one of the best sources is actually 3DZ market report, and they have come out with the 2020 Q2 market report with different sales numbers and rental numbers. Another one I'm using in this video is actually the Douglas Elliman market report, the Q2 market report, as well as the Corcoran one. Now, Corcoran one is a little bit tricky because they do not do Queens. However, if we look at the trends as a whole, we can actually see where we're going and we can actually get a pretty good grasp of what's going on as a New York City market. Firstly, the most important part of a market report, in my opinion, is the number of sales and the sales volume. By sales volume, I mean the aggregated sales prices altogether added up. And for 2020 Q2, we see a significant drop in the sales volume and the number of sales, which is the number of transactions. According to Douglas Elliman market report for Q2, there is a 25% drop year over year in the number of sales. According to Corcoran, we also see the same trend, and it is stated that it is the lowest number of sales since the early 1990s. Now, Corcoran did not give us an actual number, but according to the brokerages, we are expecting about 70% drop in number of sales and sales volume. Now, in terms of inventory, we also see a huge drop. From first quarter, we already saw a huge drop in the number of listings on the market. And even though we see a small recovery in the number of listings in Q2, we still see about 26% drop in the number of listings. And that means that the inventory is short. We don't have as many houses or apartments on the market as last year. Interestingly, in the DE reports, we see about an 8.7% increase in the new development median sales price, and we see a 6.5% decrease in the resales. Similarly, we see about 3% increase in new development from Corcoran and about 7% decrease in resales. Now, 3DZ actually reported an overall 4% drop. Now, the overall trend, I would believe, is actually a small decrease since new developments do not make a majority of the sales. It's actually the resales that take up most of the transactions. This dynamic in the discrepancy in median sales price is actually very interesting, but I think it does make sense because new developments tend to try to push for higher prices, and also the buyers for new developments tend to be a little bit financially stronger than resales. In addition, the huge drop in inventory and the number of sales actually greatly impacts the numbers that we see. In other words, since there's less transactions, each transaction actually impacts the statistics a little bit more. And that would affect the median sales price as well. So for the buyers who are really serious about buying new development or a new building, they will pull the trigger, and that will push the price for the median sales price up. And lastly, the time it takes to sell in a unit actually has increased significantly to 8.8%. And that means that in the past, if you needed 120 days, now you would need about 130 to 140 days. And that actually will contribute to a inventory overload in the future, as I can see it. So what does everything mean, when we see all 3 reports who are showing different numbers? Firstly, I think this market right now is still very buyer-sided, and it has been buyer-sided for about 4 to 5 years now. Since the end of 2014, 2015, I really started to see a shift. And of course, the market reports did not reflect that until a little bit later on. But overall, it's still a very buyer-sided market, and the buyers do get a better deal during this time. Now, of course, there are anecdotal stories about sales prices going up in certain pockets, certain neighborhoods, but I think we should take that with a grain of salt because the number of sales has gone down drastically. And the people who pull the trigger during the last 2 quarters are really, really serious buyers and they may have signed a contract beforehand are just actually closing the deals. For instance, new developments are usually delayed, and the resales for the buyers who are really serious, they may be pulling the trigger during that time. And all these factors can actually impact the number. It could make the number fluctuate up or down. Secondly, the eviction and mortgage defaults have yet to impact the market and have yet to impact the economy. During the last 2 quarters, there is actually no eviction and there is no mortgage defaults, and everything was put on hold. That means that the market, the housing prices are technically put on hold for a little bit as well. So we have yet to see the full impacts of these 2 things. And these 2 factors are something that we really need to be careful of. I personally don't think that we're going to have another housing crash. However, we do see a huge drop in rent, especially in the city. In Manhattan, we see about close to 8 to 10% drop in certain areas, and that would impact the housing prices a lot as well. Third, from most of the market reports, even though we see a increase or slight increase in median sales price in the new developments or the new buildings, the actual price per square foot for these deals actually only increased by about 1% overall when you take in all the averages of the reports. What does that mean? That means that the buyers are buying a little bit bigger units as opposed to buying more expensive units per square footage wise. So this number really doesn't mean much when we actually see an increase in new development prices. I believe the Q2 effects is actually not presented in Q2. Since for new developments, there's always a delay between contract signed to actual closing, and there's actually another delay from closing to actually sales prices recorded with the state. That means that we actually do not see the actual effects and do not see the actual transactions from Q2 until in Q3, and everything will be delayed. Lastly, the higher market seems to suffer the most during this time. Overall, the luxury market hasn't been doing well for the last 4 to 5 years, like I said. And we saw a report about half a year ago saying that at least 25% of the high-end new developments are still unsold. What does that mean? That means that the buyers have a lot more choices. And couple that with the fact that it takes longer to sell these units now, that means that we're going to have an overflow of really, really high-end new development units that are asking for less in the future. Now we're talking about a 1-bedroom asking about 3 to 5 million and a 2-bedroom asking for close to 5 to 10 million. So this is not a market segment that everyone can afford, but we do see a huge drop and a potential value pick for these units. For instance, on 57th Street, there's multiple buildings where their sales prices or their actual transaction prices nowadays are matching what we were seeing about 5-6 years ago. And that is a huge drop. And for a lot of buyers, this may be an opportunity. So what do these all mean to the buyers and sellers in this market right now? In my opinion, during this time, the sellers should move very quickly from now until around October, end of October. And why is that? It's because that we just finished a lockdown. We see a little bit more traffic in terms of the buyers in showings. And that is actually a very important thing when it comes to selling. For the sellers, if you do not sell your unit by about November, we're going to hit Thanksgiving and we're going to hit Christmas. And if we couple that with a possible second wave of COVID, a mortgage default, and a possible eviction wave, we may be in trouble in terms of the sales prices. We may see another dip. So for a seller, if you're not ready during the next 2 to 3 months, I would suggest to just try to wait it out until next February or March and see what's going on. If we do have a vaccine coming out, it may help. We really don't know if the market will completely crash or it would just be a small correction, or if it's going to be a U-shape or a V-shape recovery. But I do think that November and December and January are going to be slow. And that has been the case for the eternity of the entire real estate market in New York City. So if we do not prepare the listing right now, it may be a little bit too late. For buyers, I think preparation is going to be the key for the next 6 months. In my opinion, good deals will definitely pop up, and the buyer should be ready for it, whether it's pre-approval letters from mortgages or cash, or understanding the real estate market and the recorded sales prices, or the price per square foot, the common charges, or the maintenance fees, HOA fees, the taxes. Everything should be considered. And I think Value is going to be the name of the game for the rest of 2020 and 2021. Overall, that's my take on the 3 market reports that we have seen. I personally think that we are going to see a dip, but we may not see a crash in the housing market. It really depends on how the government and the Fed are going to be handling this. But that is what we're seeing right now. And for those of you who need to buy, who are looking to buy or rent, now may be a good time to start preparing. And for those who want to sell, if you do not sell in the next 3 to 4 months, if you do not put it on the market for 3 to 4 months, I think you should have a mental preparation that it may take up to by May or June of next year to actually sell the unit. And of course, I'm going to keep a close eye on the market. If you have any questions, feel free to contact me. I'm going to put my contact information down there. And if you like this video, please feel free to share, like, and subscribe. It really helps with the algorithm and push the video out to other people. Thank you, and I'll see you next time.